Hi, everybody.
Hey there.
Okay.
Hello.
I see that the members of the Finance Committee are here. Myrna, I'm assuming that we're also going to have some folks from Pacenti and Brinker. Is that right?
Yes.
Oh, I see Callan
they're
joining.
Yeah.
Okay. Okay. Great. Well, in that case, thanks for being here on time. I'm going to call the meeting to order. It's 3:01, and I'll call the roll of the committee members. Before I do, let me apologize for the lighting, which makes it look like I'm in some kind of horror movie. I'm in my son's home office, and I don't really know how to control the backlight here. Let's see, Commissioner Barbara McKenzie.
I am here.
Great to see you. Commissioner Dave Cahill.
Here.
And Commission Chair Deborah Doyle.
Here.
All right. Well, the members of the committee are here. That's great. Pursuant to California Government Code Section 54953, all votes during this teleconference meeting shall be taken by roll call. So now we're up to item 3, public appearances. Members of the public who wish to address the committee regarding matters not on the agenda should request recognition at this time. Do we have any members of the public who are attending and wish to address the committee? I don't see anybody. Lisa, did we have any emails from people who wished to address the committee?
There were no emails received.
Okay, thanks. Then I'm going to move us right on to item 4, and very happy to say that we have Kellen Gilbert and Alyssa Foster here from Pacenti and Brinker. They and their team have been working hard with Myrna and her team and the county to provide us with this draft of the audit for the 2021-2022 fiscal year. Myrna, did you want to say anything in advance, or should I turn this over to Kellen and Alyssa?
Sure. I would just like to add that it's been a very a good year for the Sonoma County Library. Overall, our net position has increased, and there were new items that required by GASB that were incorporated into the financials for fiscal year 22. And so overall, very good reports that I'm happy to see and report, and do want to thank the county, Jennifer Murray, Melissa Estrella Lee, and Lorena Espinoza, who helped very much. And one of the major reasons why they were contracted was to help prepare for audits, and also the accounting team. So with that, I wanted to also thank very much Pacenti and Brinker for their professional auditing services and their process for working through this. Appreciate their work.
Okay, thank you. Well, Kellen, it's great to see you again. And I know you and your team have been hard at work. How are you feeling?
I'm feeling much better. I still have a frog in my throat every now and then. So if I pause, I hope you forgive me. And Andy, I have created a slideshow that if you allow me access to share my screen, I'm going to go through some of those items that Myrna mentioned, kind of the highlights of the financial statements, as well as talk about some items that are new for this year and a couple other items. So
That's great. Thanks very much for doing that. Lisa, can we enable Kellen to share, please?
Yes, I just, yep.
Okay.
go.
Oh, excellent.
Bear with me. Okay, can everybody see the presentation?
Yep.
Yep.
All right. Thank you for the introduction. My name is Kellen Gilbert, and as Andy mentioned, Alyssa Foster is also on the Zoom. She was the audit senior. Brett Bradford was the independent report reviewer, and Gina Roach was the audit associate on the team. And as you probably recall from past presentations, I always like to start with this slide. It's, I think, one of the most important slides, which really lays out the roles for the engagement, the financial statements, and most importantly, maintaining a system of internal controls for the financial statements. That is the responsibility of management. These are their financial statements, and all the information within it and decisions that encompass it are management's. Our responsibility as the auditors are to audit the financial statements to make sure that they are free of material misstatement. And we do so using a risk-based approach where we consider inherent risk and control risk to design our procedures. We then perform year-end balance testing, analytical procedures, inquiries, reperformance, and we also evaluate the adequacy of the disclosures by reading the draft financial statements. So as Myrna mentioned, just some few financial highlights, which these can also be found in the statements and also the management discussion and analysis. But I like to call out just a few items just to give a high-level overview of how the library has been operating financially. Total assets and deferred outflows exceeded total liabilities and deferred inflows, which is also known as net position, by approximately 32 million, with an increase of 8.5 million. So to me, those are both pretty substantial numbers, especially when you look at what the library is reporting for those in previous years. The Measure Y Special Revenue Fund balance increased by approximately 4.2 million and has an ending fund balance of 21.2 million. Again, we'll talk a little bit more about Measure Y. Essentially, those funds are used to improve and create new library programming, and that shows that you still have a substantial amount of funds on reserve related to the Measure Y fund. This last point is what I was alluding to earlier. It's really, in my opinion, fairly amazing to see how far the library has come. If you look at the 5-year period from July 1, 2028 to June 30, 2022, your net position has increased by 38.8 million over that time period. Really substantial improvement from what we call a net deficit that was present in 2017. So really a substantial improvement in the health of the financial organization over just the last 5 years. This is just a quick slide to show you where we spent our time during the audit. Some basics: cash investments, revenue recognition. We're always going to audit closely. The financial statement presentation and disclosure, the single largest area of our focus. Accounts payable, pension and OPEB, Measure Y, which I'm going to talk about later. And the last bullet point down here that I wanted to bring to your attention is the GASB 87 implementation. This is what Myrna mentioned earlier, and I actually have a few slides to talk about this. So during 2022, the library implemented the Government Accounting Standards Board, known as the GASB, statement number 87 leases. So the GASB typically issues 2 or 3 new statements every year. So not all of those statements are going to be applicable to every government agency. And even fewer have the level of impact that this statement has had. And while I don't want to share my opinions on all things GASB, I will say that sometimes the GASB statements can be very obscure in kind of the reasoning and the effects on the financial statements. This is not one of those statements. I think this statement actually makes a lot of sense when you look at it from a broad viewpoint. So previously, operating leases were recorded what we would call accounting slang off balance sheet. Basically, operating leases were something that we were tracked for financial statement purposes, but would not show up on your statement of net position. And this is also true if you remember back when GASB issued 68 and 75 for the pension and OPEB liabilities. Those used to also not be recorded on the statement of net position. And you can see a concerted effort by the GASB to get all the items that affect your current financial well-being onto the statement of net position. So under that line of thought, they have issued GASB 87, which created a right to use intangible non-current asset to represent the library's ability to use that specific leased asset. And also, probably more importantly, a lease liability to represent those non-cancelable future payments that the library has committed to. So essentially, they took something that was reported in the footnotes, but not reported on the statement of net position, and have now implemented this new standard to require that asset and that liability to be on the financial statements, which I think is, in general, a really good thing. During our testing of the implementation of GASB 87, we did note a control deficiency. We noted that the amendment to the Rohnert Park headquarters lease that expanded the leased space was not included in the original GASB 87 calculation. The resulting adjustment increased the right to use leased asset and leased liability by approximately $370,000. Sorry, I've got a duplicate here. Our recommendation is that management works closely with the ACTTC team who created those calculations to ensure that they're complete and accurate. As you saw from our area of focus of this year, anytime there's a new major implementation of a GASB, it's an area where we're going to spend a lot of time and attention, and that's because it's challenging and complicated. And so our recommendation is that the ACTT team communicates with the library management, shows those calculations to libraries management prior to them coming to the auditors to make sure that all the elements that should be included are in fact included in those calculations. That way they can be complete at the time that they come to us for auditing. This next section of my presentation, I'm actually going to call out and blame Andy for these few slides. I apologize for the dryness of this part of the presentation. We were having a robust conversation on what are deferred inflows and outflows, and I was failing to provide an accurate description. And so I've included some historical information here for your benefit. It is kind of a obscure concept and a little bit challenging to understand, so I'm doing my best. Please feel free to interrupt me if you have questions. In 2011 and 2012, GASB issued statements 63 and 65, which created the reporting framework that the statement of net position should report 5 classifications instead of the traditional 3, assets, liabilities, net position, and the 2 new items are deferred outflows and deferred inflows. Prior to that, deferred outflows and inflows were reported as different items under the asset and liability classification. But due to their nature, the GASB didn't feel that they quite met the original definition for what is an asset and a liability and wanted to create their own classification for them. So what are a deferred outflow and a deferred inflow? A deferred outflow is the current consumption of an asset. So essentially you're using an asset in the current reporting period, but really the consumption of that asset is for a future period. And a deferred inflow is the opposite of that, where you are acquiring net assets, but really the acquisition of that net asset is applicable to a future reporting period. So again, a little bit hard to kind of comprehend, but essentially it's the use and acquiring of net assets related to future periods. I'm not going to list all the different types of deferred inflows and outflows. There's not a set list, but the most common is what is applicable to the library is for inflows and outflows related to pension and OPEB plans. And I'm going to go into a little bit more detail here. And also I should say that there's information on deferred inflows and outflows. The basic definition in note B to the financial statements, and also in the pension and OPEB notes. I don't have those two written down. There's a lot of discussion on and actually showing the calculations for the deferred inflows and outflows in those financial statement footnotes.
Yeah, Kellen, this is Lisa Davison. I want to let you know that Andy Elkin has his hand raised.
Thank you. Sorry, Andy.
Yeah, no problem, Kellen. Just two quick questions for you before you go further. When GASB comes out with a statement like this, I'm assuming it's not optional for us, right? We need to go ahead and change our accounting and compliance with it. Is that right?
Yeah, absolutely. And that's true for all the GASB statements or pronouncements. None of them are optional. Within a statement, there might be an optional component on implementation, but overall, the effect of those statements are not optional. So the GASB basically sets the rules. Those are ironclad, and you as a government agency are required to follow those GASB statements, and we as the auditors are required to report if you are not following those standards. But essentially, they are the rule makers, and they set the rules without debate. Well, they have debate prior to issuing those reports, but once the statements are issued, generally there's no wiggle room.
Okay, and then relative to the current discussion about deferred outflows and inflows, did those statements apply only to government agencies, or did they also change the way that accounting is done for corporate entities?
No, that's a great question. The Financial Accounting Standards Board, the FASB, issues the statements for for-profit entities. So the GASB is only the rule makers for government agencies, and therefore these statements had no effect on the for-profit financial realm. Okay,
great. Sorry to interrupt, but I just wanted to get those points clear before you go on. Please go ahead. Thanks.
Thank you. It's, I'm so far in the weed that sometimes I forget really how to describe the basic nature of these things. So I appreciate the assist, Andy. So back to the specifics for the library. The library has approximately 3.6 million and 1.7 million of deferred outflows related to their OPEB and pension plans. Those numbers can be found on the statement of net position and also again in the notes. I think this is a good example to help kind of illustrate what is a deferred outflow. Of those amounts, the vast majority of those amounts are contributions that the library has made to those plans, but those contributions came in after the closing point in the calculation for those plans. So as you recall, the OPEB and pension plans are always calculated in arrears because of how complicated the accounting is for those, the actuarial reports come out 6 months and a year, or base their calculations 6 months and a year in arrears of the financial statement reporting date. So what I mean by that is that the net pension and net OPEB liability and other pension and OPEB numbers that you see calculated on the financial statements are based off of financial transactions that took place as of June 30th, 2021 or December 31st, 2021, depending on which one we're talking about. But they do not report the current financial information as of June 30, 2022. So because of that, contributions that were made in 2022 are not included in those net pension and net OPEB liability amounts, and therefore they'll be recognized in future periods. So that is a prime example of what a deferred outflow is.
So Kellen, this is Andy, I'm going to jump in again for just a sec. Forgetting for a moment what it's called, because deferred outflow, you know, is not to me an intuitive term. We should be thinking that these are similar to assets. And I guess before 2011 and 2012, they were considered assets, right? They're contributions that we have made to these plans. But because of the timing difference, Gatsby's saying, hey, you shouldn't count these the same as you do other assets, but they do get added to our assets before the liabilities and deferred inflows are subtracted. Is that right?
Yes, from the standpoint of calculating your net position, they have the same additive value as assets.
Okay, that's very helpful. Thank you.
Yeah, I'm hesitant to say that they are assets, and your point that they would be included in assets is technically true for deferred outflows, except not applicable to the libraries because these statements came out prior to the statements that required the pensions and OPEB to be recorded on the statement of net position. So they were never included in your assets because of the timing of when these statements came out. But your general point that if they were not separately disclosed, they would be in the asset group as they are an additive debit balance when you consider your net position, if that makes sense. Okay, I'm seeing a thumbs up. Again, I apologize for the dryness of this topic. Deferred inflows is even more complex to kind of visualize. The library has 6.7 million and 1.7 million of deferred inflows, again, related. The only deferred inflows and outflows that the library have are related to their pension and OPEB, which is not uncommon for most government agencies. Of these amounts, and again, the exact details can be found in the notes, but the majority of these relates to differences between previous calculations of your OPEB and pension plans based on the projected and actual earnings of those plan assets that the actuarials use to project what your net pension liability and net OPEB liability are. So essentially in those other previous reports, they expect a certain rate of return, and when that rate of return is either exceeded or falls short, that creates a difference in their plan versus what was previously recorded, and the fallout, the net effect of that gets reported as a deferred inflow or outflow. And that's about the best that I can describe it. In the Appendix A of the CalPERS report and pages 22 and 23 of the Bartle and Associates OPEB report, there's a complete history of the earnings and the differences in the earnings to actual that has been reported for the library and how that trickles through to your end deferred inflow calculation. So that's my explanation for deferred inflows and outflows. I hope I haven't made anybody more confused. Are there any other questions before I move on from this topic? I'm not seeing any. Measure Y compliance. This is an area that we always like to report on just because Measure Y is such a substantial portion of the work that we do and the financial statements for the library. We base our testing on the official Measure Y ballot that was passed and the Library Maintenance and Restoration Enhancement Act ordinance as approved by the commission a few years back. And again, we do not evaluate the effectiveness or the accomplishments of the Measure Y program. We are simply looking at whether or not the expenditures made in the name of the program are in compliance and follow other appropriate accounting terms and calculations. So we look for the allowability under the applicable compliance requirements. We look at the classification, making sure that the expenses that are recorded in Measure Y are in fact for the Measure Y fund. And we look at cutoff to make sure that expenditures are in the correct period. Again, I also like to point this out just because I think it gives perspective of what is allowable for the Measure Y fund, and it is a fairly broad definition. Costs to maintaining existing libraries, costs to improve library services, upgrading the library facilities, supporting existing library programs, and improving access to libraries. Those are all allowable costs in accordance with the measure. So in conclusion, we anticipate issuing an unqualified opinion. That is that the financial statements are fairly stated in accordance with generally accepted accounting principles in all material respects. And also our report on government auditing standards, the compliance report, will have no instances of reportable non-compliance. And I will just note that there were no instances of any non-compliance that we found, or any material weaknesses in the internal controls. Lastly, these are just some other items that we are required to communicate with those charged with governance, which we consider the audit committee and the commission to be. We did not encounter any fraud, illegal acts, or any significant or unusual transactions. We don't include the GASB 87 calculations to be significant or unusual transactions. Really what we're looking for there is anything that isn't explained or anything that may have varying levels of interpretation to them, something that we're not, management made a determination of how to account for, and we were not sure how to conclude on. Again, we have not encountered anything like that. I'm just trying to describe what those would be and that we would report those to you had we found any of these items. And that is the end of my presentation, and I'm assuming that there are some other questions on these items.
First of all, Kellen, I thank you for preparing the presentation, but I really want to thank you and Alyssa and your team. I know that especially over the last week or two, there were some last minute things that you had to work out with the county and with our accounting team to get this draft audit to us. And really appreciate the extra time and effort that you put in to do that. And very, very happy that we're seeing this in such a timely way after the self-inflicted delays that we created on the last 2 years audit. So very, very grateful for that. I have just a couple of big picture questions, and then I'm going to open it up to the committee, if I may. I was really glad to see that you indicated that you plan to issue an unqualified opinion. It's, I think, the only instance I can think of where the term unqualified is a plus rather than a minus. My question is, what has to happen in order for you to do that? And will that be done by the time of our next commission meeting, which is it's the first Wednesday in January. So it's about, what, a week and a half from now?
Yeah, fantastic question. And in fact, I should include a slide on next steps in the timeline. Essentially, we have the audit open at this point to incorporate any comments that this committee might have. Historically, this committee has, much to my chagrin, has been able to find typos and corrections. So we wanted to make sure that we present to this committee a chance to have any input or any other corrections that might have been noted. But essentially the audit is complete. I think there's one or two very minor formatting issues that we would ask the county to correct that should take less than a day to complete. But essentially coming out of this meeting, if this committee has no further comments, we should be able to issue a representation letter that needs to get signed and move forward and get this audit issued within a couple of days. But it just really depends on if there are any other comments outstanding from this committee.
Okay, well, I'm going to turn it over to the committee in just a second, but one other question for you, please. And I guess this is kind of a reminder to myself and to the other members of the committee. Last year, I believe that I peppered you with a whole bunch of questions relating to the pension fund and the OPEB, and you were patient enough and kind enough to educate me regarding the scope and purpose of the audit versus the scope and purpose of the reports provided by CalPERS and by Bartel and Associates. What I remember from that is that the focus of the audit is that we're reporting the information that they have provided fairly and correctly, but it's not to get into the nitty-gritty with your team about whether you think we've adequately funded the plans or anything like that. That's really outside the scope of the audit. Am I stating that correctly?
Yeah, I'll add a little bit more context. Yes, we
Please.
Absolutely provide no characteristics on the funding levels, as we would consider that to be a management decision, which we are prohibited from making. I will say that we look at those, we consider the reports from CalPERS and Bartel to be reports, again, that are furnished by management using what we in the audit world consider management specialists. Essentially, they are professionals in that specific area. And so we read those reports, we make sure that you have a signed report. We typically call the lead partner on those calculations or do some background on them to make sure that they are well known in this realm and have the adequate skills, experience, and expertise to provide these reports. And then we also do look at the reports to see whether or not the information within makes sense as a whole, so that we don't see any very unusual numbers going in an opposite direction of what we might think compared to the other information within the reports. But you're right, we do not audit or perform any procedures over the numbers that are in these reports, but we do read them, we do look at them to make sure that they make sense to some degree. But essentially we consider those to be furnished by management specialists.
Okay, that's great. Thank you. So I'm just gonna, Dave, I see you have a hand up, and I'm gonna turn to you in just a second, and Barbara as well. I just want to mention finally that Myrna and Erica and I did have an opportunity to meet last week with Kellen and Alyssa, and we provided some input into the first section, the management's discussion and analysis, the so-called required supplementary information. But at this point, Dave, I'll start with you. Comments, questions, input, anything for Kellen and Alyssa?
Yes, this may fall under the category of previews of coming attractions. We have had a persistent issue with the rather precise language of the Measure Y categories and the difficulty of determining which expenditures go exactly where under property or sales tax. And within the past few months, and I can't remember which months, after a good bit of struggle and work by our financial team, we passed a policy allocating by department and even within the departments stuff to property tax and sales tax, so as to fall within the categories in the ordinance, but give it greater precision and greater ability to be used on a day-to-day basis. And this was approved by the Oversight Committee. As I recall, it is only supposed to take effect starting July 1st of this year. But I hope that you got it, and hope you like it.
I will be honest, I have not seen that document, and I would be greatly interested to see it. If it didn't go into effect until July 1st of 2022, then it would be outside the scope of this audit.
Right.
However, knowing about those type of significant changes to accounting policies are exceptionally important for us to be able to do our job. So I appreciate you bringing that to our attention, and I will follow up with Myrna to make sure that I have it. And more importantly, and I'm assuming Myrna has already done this, making sure that that has been provided to the county so that they can correctly record these items in real time as they're being expensed for each category.
Myrna, I see you nodding. Will you, you'll please follow up with Callan and make sure he has that?
Yes, yes, the county is aware and has those policies and is working very closely with us in terms of following that policy in this current fiscal year. And I'll follow up with you, Kellen.
Thank you very much. I appreciate nothing auditors hate than finding out something at the last minute. So I appreciate you giving me a full year heads up, because that will definitely affect our procedures for next year.
And we already have the policy, just so you know, Kelly.
Great, thank you.
Yeah, great. Dave, thanks for mentioning that. And Myrna, I have to say, I love your background. I haven't seen that one before. Barbara.
Yes, thank you. I appreciate, Kellen, your report and your slideshow and the work that you and your team did to get this pulled together really quickly. I personally would have liked a little more time to look at this. I spent almost all day today, and it takes hours to really go through this. And so I don't know what the timing was, but anyway, I have a number of hopefully small things, but on page, let's see, it's 4 of the audit and page 8 of our agenda packet. These are smallish comments, but important to me as an English major. Under library program achievements, the first one, we talk about the Sonoma County Library debut. It debuted with major outreach events, which is great. So since that sentence has a verb in it, like the next one, the first ever online high school graduation held. So that needs to be was held. So we have a consistency in the tense, I guess, having a verb in a tense. So that was held. Finding History Day, an in-person gathering was held. The Library Teen Film Festival was held, or some verb there. New book clubs have engaged diverse community members around crucial topics and introduced them, past tense. Let's see, oh, I can't do this, you're doing it. The Family STEM program was provided in a pop-up space. And the last one, Dial a Story, was launched on the library call program, just to get a consistency of the way these things read. kind of just a comment that I made to myself when you were talking. I don't know what an ACTTC team is, I don't think.
I'm sorry,
Unless I
that's
missed
the auditor, controller, treasurer, tax collector. That's the county's team who prepares the financial statements.
Okay, thank you for that clarification. Anyway, under that, on that page, of course, we're really pleased to see the great improvement in the financial position of the library, as you pointed out. All these pages have like little folded over comments here, and I won't ask that one. Let's see. Our page 12 of our packet, page 8 of the report. Down to the bottom. So the library's investment loss of over $1 million was due to an unrealized loss on investments, which was offset by interest income. So this is because, just for clarification purposes for the public or whoever, this is because we have all of our money, almost $40 million based on what I saw later on, invested in a county pool. And the county makes up investment decisions. And unfortunately, the county investment pool had a bad year and we lost over $1 million, which is kind of shocking to me. It's a fairly conservative investment policy. Is that a fair statement?
It absolutely is. And I believe we have a disclosure that notes where that policy can be found, and the fact that they focus on short-term investments and a lot of other useful information on those investments and how the pool works later on in the financial statements. But your overall characteristics of this is absolutely correct. And this was actually brought up in our last meeting, and essentially this is obviously not limited to the library. There's hundreds of billions, I believe, invested in that pool, and overall it was up by a substantial amount, and then, as you noted, declined by a very substantial amount in a very short period of time.
Barbara, I'm going to jump in here for just a second. I think that's a great call out. And Kellen, I did see in note B, and then even more in note D, you were quite specific about how this money is invested. And I think that in this bullet point on page 8, we should call out that additional details are provided in notes B and D. Please go ahead, Barbara.
Okay, so page 12 of the audit. At the bottom. Just under the actually last paragraph, point out what a wonderful result we're having by having our updated OPEB policy. And it's just made such a significant difference. We've stuck with it and we're really making great headway with the OPEB report. So I just wanted to call that out. I have a big smiley face on my page there.
I'm not sure we can include the smiley face in the audit, but duly noted, and thank you for leading and supporting that effort.
Yeah, I was the chair of the finance committee, so I'm really proud of that.
Barbara and Andy, and I hate to be the bearer of bad news, but I would like to bring this to your attention. So overall, absolutely agree that the OPEB and pension plans had great years and are in a healthy spot, if I can characterize it as that for this period. But I want to, again, bring it to your attention that those are calculated 1 year in arrears. Yeah. And so this massive decrease on investments that you are seeing in your cash position has not been calculated through the OPEB and pension plans, again, because those are calculated as a cutoff date earlier in the year before those losses were fully realized or even unrealized. So
totally understood, Kellen.
My only warning is that it could be a pretty ugly number next year through no fault of the libraries, but just because of the results of those investments. That was all I'd like to say.
Yeah, no, that's appreciate your sober reminder. And just FYI, this committee will be taking up this issue in a couple of months once Myrna and her team have completed their 5-year projections. Barbara.
Yeah, I'm going to be happy today. So on page 13, under general fund budgetary highlights at the top paragraph there, 3 variances under the last couple of sentences. Salaries and benefits were under budget due to unfilled positions and job attrition. I thought that there was also a calculation error in our benefits that threw that off, because I think that's a really high number, just unfilled positions and job attrition. Am I remembering correctly?
We had a discussion with Myrna about this, Barbara, because and I asked the same question, but rather than explaining it again, Myrna, can you remind us of what the actual situation was here with the estimate of benefits?
The benefits are calculated. So what is driving this are a few variables. It is that we have attrition, regular attrition, and unfilled positions that attribute to salaries and benefits. In addition to that, a closer review of the benefits when we budget is that, as you know, our budget is constructed and developed in January through March in general, and benefits that we procure through CalPERS are not established until much later in that calendar year for the following year. So CalPERS reviews benefits, I believe, in June, and then in August, and then later after August is when the library receives the final numbers for the following and they actually work on a calendar year. So it's a bit of a art to exactly forecast and budget for benefits. And so in the last year, the benefits factor was a little higher than actuals, and therefore we did have that's another contributor to the underspending in the budget for salaries and benefits.
Mary, do you mind if I add to that real quick? I apologize. This was something that we should have caught. So we did have this discussion last week, and if you look at the bottom of page 8, we did clarify the language there that the big decrease. So salaries and benefits is a huge pot that we're drawing from, and as you can see, the actual salaries and benefits did increase from the prior year, but that fallout in the change in the pension and OPEB calculations resulted in a current year decrease in those two expense accounts, which get included in that large bucket of personnel expenses. So we can take this verbiage that was updated from our meeting last week, and we can have the county do something similar on those other future pages to make it more clear that this was not due to, while there was some aspect of attrition in positions, really the greatest culprit for this overall decrease is the pension and OPEB expense. So I would recommend taking the language from this this item and moving it down to those future pages to be consistent.
Thank you, Kellen.
Yeah,
That's correct. I guess essentially what the analysis does is look at the change in net position, and the change in net position takes into consideration these GASB adjustments.
Yeah, I just think that one paragraph later on is a little misleading, because it looks like we have a lot of vacancies and stuff. It isn't, you know,
Yep.
it doesn't
That
really
was-
capture what else going on.
That was
And-
Andy's point, and I completely agree.
Okay, right. Okay, so then I'd like to go to page 21 of the audit report. Okay. The top paragraph there, the language is kind of, I don't think quite correct. It says toward the bottom of that top paragraph, the amendment may change as the governing body of the library and cease the library's treatment as a component unit of the county. I think it's more correct to say it created a separate public agency. You know, I don't think it was ever a component unit of the county. Maybe it was a department of the county. I don't know. I don't think that clarifies exactly what the amended JPA actually did. And I would kind of favor something like it created a separate independent public agency, something to that effect. As more accurate.
I'd have to go back and look at that one, but I think that language is similar enough that I can probably make that change without issue.
Okay. And then on down and that same page under government-wide and fund financial statements, top paragraph, the effective inter-fund activity has been removed from these statements. I'm not sure exactly what that means, but is that a change in this audit? We used to reflect inter-fund activities and now we don't?
No, that's basic. That's a requirement that you don't show inter-fund activity. So that's just boilerplate language that the county is using. That's not a change in anything.
Okay, super. All righty. Let me erase back here to my next folded over page. Okay, on page 27. Summary of significant accounting policies. Under fund balance policies. Down farther. Yeah. The library, it talks about the library's fund balance policies here. The library needs to maintain unrestricted fund balance in its general fund sufficient to fund cash flows from the library and provide, just to stop there. Is there a place we can see that? We're talking about, you know, coming up, having serious discussions about our undesignated fund balances. And this clearly tells us that we need to maintain unrestricted funds to fund the cash flows, because of course, you know, Measure Y comes in every month and property cap comes in twice a year. Is there a place that that's reflected anywhere?
No, that's simply a management policy, and that level of detail is not reflected, nor is it required to be reflected in the financial statements anywhere.
Okay.
That's basically just talking about general stewardship of the fund balance.
Okay, then I'll carry that forward to our CFO in a little while and ask her about that. Okay. I don't want to miss anything, but I'm trying to go fast here. On page 38. Under benefits provided to retirees there. Okay. It says the library contributes toward post-retirement benefits for employees who retire under CalPERS and choose medical coverage offered to County of Sonoma employees. Is that correct? Our employees used to be part of the county benefits choices, but several years ago it was taken away. The county didn't want to offer health benefits to our employees, so we went out and got ours through PERS and CalPERS. So I just was puzzled by that statement.
I'm not sure if that is a true statement, but certainly we could change it to coverage under plans offered by the library, and then that would clarify any sort of confusion.
Okay. I'd like to know that by whoever is the correct person to ask that question of, because it's interesting to me if it's still true.
Yeah, we can certainly find that out. I just don't know off the top of my head.
Okay. Page 44. Under leases. I appreciate your breaking these out because on our financial reports, it's, there apparently has all been kind of lumped together. Because I thought we were paying more than $40,000 a month for library headquarters. My specific question is, this shows an end date. I would try assuming means the end date of the lease of 2033, which I just can hardly believe is true.
I think that includes the possible extensions, doesn't it, Kellen?
Yeah, it does. So that's a great observation. The standard requires that any extension, and I don't want to missay the right amount, but the right verbiage. It's any extension that is more likely than not to be exercised, I think might be the threshold. Again, I don't recall off the top of my head the exact threshold. It's over a 50% likelihood of being extended. Has to be included in that calculation. So they were the first thing everybody thought of when these came out was, okay, we'll just make it a 1-year lease with 50 1-year extensions, and that way we'll get out of these reporting requirements. And so they immediately turned around and said, no, any extension that is deemed likely to be extended to be included in that calculation, which is why the end date is all the way out to 2033.
So does that say or somewhere earlier in the report that I didn't make note of? Because if not, I think that'd be good to make a note of that. And certainly if you have kind of it looks kind of factual, like end date, that's a statement of fact rather than a possible end date or something like that.
Yeah, it might be in note B under leases where it talks about what gets included in that calculation. I'm double checking really quickly.
Okay.
But this all has to do with that GASB
Right.
87, correct, yeah.
statement.
Understood, but it's kind of looks like a fact in terms of our audit. And I mean, this is for the public might question whether we had a lease going out to 2033.
My recollection was that we had like a 5-year lease with 2 5-year renewal options. Does that sound right?
Yeah, that sounds right to me from what I remember when I was reviewing them.
Yeah.
So I just think that would be clarifying to add that as a statement of.
So Barbara, in note B, it says the lease term includes the non-cancelable period plus extensions that the library has deemed reasonably certain to exercise. So again, that's I would be hesitant to include it just because it is in the policies and that is also in the GASB. So typically we wouldn't state that information there. The amounts are also the present value of the cash flows, which again, we state in note B, but we don't include in that table simply because we're trying to follow the GASB's recommendations for what needs to go in that disclosure as close as possible.
Right.
Okay.
Kellen, I would add that the fact that you show it to 2033 in no way obligates the library to renew the lease until that time. It's simply
absolutely correct. Yes.
Financial representation of where we are right now. And
right. I understand it doesn't obligate it. It just looks to me more like a fact than a possibility or something.
I will say this, Barbara, I think this is actually going to be useful to us if we start to get into further exploration around the possibility of buying a building to house the library headquarters, because we'll have some basis of comparison for what the costs are over a period of time. Yeah.
No, that's a good point. It's just to me, just how it kind of reads as if you're just from the public, you'd think we had a lease out at 2033. Anyway, the next couple of comments I was going to make have to do with the PERS and the CalPERS calculations. I'm going to take what you said, Andy, that we're going to be talking about that in more detail. So I'll say my comments on that. I do want to make a comment that note again that the assumptions for the CalPERS the amount we're supposed to make on CalPERS is very different than the amount assumption that we're of interest that we'll make on OPEB. So anyway, but we're going to have further discussion about that another time. So anyway, so thanks very much. Thanks for your patience as I walk through those.
No,
Appreciate it.
Barbara, listen, I always appreciate the thoroughness with which you review this. And I guess the question I have, I'd like to balance two concerns here. I would like to give Kellen and Alyssa and their team enough time to finalize the report in order to present it at the next commission meeting. But I realize that despite everybody's best efforts, we got it fairly late. Kellen, would it be possible for me to give the committee members, I don't know, a day or two to review further and consolidate any comments and send them to Lisa? Would that enable you guys to still get everything done in time?
I believe so, but since there's a third party, the ACTTC, who's making the changes, I can't speak for certainty, but typically when you're talking about these level of changes, they're able to turn them around in 24 hours. So I believe that you could hold on to this and continue your review and send me any comments you have by the end of this week, and we could still get the report issued prior to the end of the year. What's the date that you need to get this into the commission packet? I guess we should start with that question and work backwards.
Yeah, Lisa, when would you need to have this finalized?
Yes, let me look at my calendar. So I need all items by end of day Friday.
Is that the last at your normal deadline, or do we have some wiggle room there?
Well, I mean, there's wiggle room if people want to work over the holiday weekend.
Yeah.
But I'm not able to, it's everybody's up to making their own decisions. I'm not going to do anything on the weekend, but come Tuesday morning, December 28th, I'll be looking for everything in my inbox, 9 a.m. Does that answer your question?
Yeah. So I would like to make a recommendation. So I will be out of the office starting tomorrow. However, Julie Brown, our accounting manager, can collect the comments by, let's say, first thing Wednesday morning from the finance committee, and she can compile them and submit them to the county. So Julie and the county can finalize all the comments and then submit them. And the county has been submitting all of our work to the auditors. And then the auditors could hopefully have all the work by, does Thursday morning work for you, Kellen? So that we can have the report by Friday evening or Friday, I don't know, sometime afternoon.
Yeah, assuming that you can get all your comments to the county by Wednesday, and they could give us the revised draft by the end of the day Wednesday, we would be able to issue it within that 1 day period of Thursday to get that wrapped up.
I see both Barbara and Dave have hands up. Myrna, Barbara, what were you going to say here?
Well, I just want to make sure if I can assume that everything that I noted at the meeting, I don't have to like re-summarize and send it back in. If then because I'm really kind of stretched for time right now in terms of doing anything over. I don't have time to do it over.
No,
and
we're not asking you to do anything over. I just, right. I'm only, and I'm not trying to create a difficulty here. It sounded like you felt that you were rushed, and I assumed you were looking for a little additional time. If you don't.
No. Yeah, I think that I have spent virtually all day today on this. I probably have pawed through it sufficiently, even if quickly, done my best, and I don't have an opportunity from now to the next couple of days to spend more time on it. So as long as
Fine.
my comments got captured, I'm good.
Okay, great. Thanks, Dave.
Yeah, I'm not planning to submit any comments.
Okay, well, that's great. So let's just agree that we'll incorporate the comments that were included here today. Thank you for your review, and this will simplify things for Kellen and his team.
Yeah, and I just would like to add a comment for the record. That should be a discussion point really between us and Myrna and the county's team. Typically, we've been trying to do this audit in about 5 or 6 weeks, which is really a pretty quick turnaround for an audit of this complexity. And given that I would like this committee to have the draft longer, and especially the management discussion and analysis, which really is should be scrubbed completely by this group prior to them it even coming to us. I think we need to have a discussion about expanding the timeline to get this audit completed. We were originally scheduled to begin work in October, but the county needed an additional month. And given the holidays in November and just people being off in December, it really created an uncomfortable time crunch for us and for you. So Myrna and I would say that we should meet with the county and look. I know this group really wants to get these issued in January, but with all the holidays, we either have to start on time in early October or potentially look to move these to get issued in February, because this is just not feasible going forward.
I agree. I've already had conversations with the county, and we're new individuals on that team, new rules that we were all working with, and that caused some delay. So I believe that it was on our end that caused the delays, and that we agree that we've already agreed that we want to complete these much sooner, and we'll additional resources. We now have Julie Brown, our accounting manager, that has experience in this area as well. So we do expect to be more efficient for the next audit around. So
Perfect.
yes.
Yeah, but that said, Kellen, I want to personally thank you and Alyssa and your team. I know this was a crunch for you, and we're so grateful to you for the extra effort that you made to get this to us on such a timely basis. Dave, do you have a final comment?
Yeah, it would not break my heart if the commission did not receive this until its February meeting. We made so much progress compared to the problems of former years. I don't think anyone is going to have a problem with a delay until February. It's just my own personal view.
No, I'm glad you mentioned that. And I think, obviously we're in such a different position than we were a year ago. And that's thanks in no small part to Myrna and the county, but especially to Pacenti and Brinker. So why don't we take this offline, Myrna, and we can talk about whether in fact for next year it's critical that we get it to the commission in January or not. But understand that we do need to coordinate that with the county.
Right.
So,
I do believe that if we have all the comments from the finance committee at this time, that we can make those changes and quickly turn around to the county by early tomorrow, and they can make those changes and get the report to Pacenti and Brinker by, I'm just, I don't want to commit them, but hopefully by Wednesday after evening, like Kellen has suggested, so that he can turn it around. He already heard the comments as well, so he knows what,
no, I'm sorry. I think Dave was talking about next year.
Yep.
Oh, next year.
Yeah.
Oh, next year. If I had my druthers, I'm not going to say, but it will be definitely definitely much earlier than this. I would be hoping that that the commission would get it in December. You know,
Okay, well, I want to say, let's take that discussion offline for another time. Dave? Did I
Yeah,
miss?
no, I actually was talking about the next few weeks.
Oh,
But if it's not a problem to do it for the January commission meeting, that's terrific too.
No,
Okay, thanks.
we can make this January commission. That's not a problem. We want to get this issued for you guys. I feel terrible I don't think it's professional to ask you to review these in less than a week. And so I felt bad about the timing for this year. But we can certainly get these done by Wednesday or Thursday. So
okay.
Kellen, I understand, and I really appreciate you saying that, but I do feel that a lot of the delays came from our end for various reasons. I also did not look at the draft MD&A for this last minute. So, again, we'll work on now that we have this team, and hopefully everybody's on board, here with us, come in the next few months, because literally the next audit is just around the corner, and we could get that started much sooner.
perfect.
Okay. Deborah,
Just a note to say thank you so much, Keelan, for your work. And I had a couple of notes, but Barbara covered them all. So we are learning how to read this stuff fast. and we hope that next year we'll have a little bit more time to do so. So thanks very much.
And yeah, there were significant delays on the county's part due to the pension and OPEB plans and the GASB 87. So some things were outside of everybody's control. So I just want to take time to acknowledge that even with everybody's best intentions to get this done in December and January, some things were not in anybody's control for getting these things done. So I appreciate your efforts as well.
okay. Well, Kellen and Alyssa, I'm going to let you guys go. We have one more agenda item, but you certainly don't need to stay on. So thanks in advance for your work in finalizing this, and I hope you and your families enjoy a very happy holiday and best wishes for the new year.
Thank you very much.
Yes, thank you so much. I do have one last question. Do you want me to leave in the slides and have the discussion about the deferred inflows and outflows for the full commission? Otherwise, my report's going to be essentially the same as it was today. But I didn't know if you wanted me to have that conversation at the commission level.
I'll take it. I'm going to ask the other members of the committee. I'm inclined to say no, that you don't, I appreciate the work you did on the deferred outflows and inflows. Was helpful for us in reviewing it. I don't think it's going to be of concern to the commission as a whole. What's your feeling, Deborah, Dave, Barbara? Would you leave those slides in, or would you take them out?
Let's take them out. Simple is good for the commission.
Take them out, Barbara?
Yeah, I don't think the commission's going to ask that a level of question.
Okay.
I think the oversight committee might be interested in it, but I think that the commission not so much.
Okay.
I kind
That
of trust
helps.
the finance committee to have
Right.
asked that level of question.
Right.
Well, thank you for that clarification, and happy holidays, and we'll get this thing wrapped up. Thank you.
Okay. Thank you so much. Really appreciate it. I know we've taken a long time on this, but it's certainly important. We do have another agenda item, which is the financial reports for November. I'm going to turn things over to Myrna, just as a quick scene set, a reminder to everybody. We're 5/12 of the year in. We will not be reflecting any property tax in the November reports. We'll see those next month. And because of the 2-month delay, we're only seeing 3 months of sales tax revenue, but we would expect to be seeing 5 months of expenses for all those items that are relatively straight line. So Myrna, why don't you take it away?
Okay, well, I just wanted to say that these reports look right on target. As you know, Chair Elkin just mentioned the status of our revenues, both for property tax and sales tax. Under property tax, I would like to mention that although, we're now in December, the first receipt of property taxes were due earlier this month, and they've posted over $13 million, well over 50% of our revenue target for this fiscal year. Yes, that's very good news. And regarding sales tax, as you can see, we're also, at this time last year, we're doing much better as well. So all good news on the Measure Y sales tax end of revenues as well. And we'll continue to take a close look, monitor those. Around expenditures, we're still under the overall, right now in the fiscal year, we're at over 41% of the fiscal year through November. And our total expenditures are just about hovering 30%. We are still seeing some savings in salary and benefits, and now in November, we started to have now payroll for the Sunday hours. So happy to report that, and we'll continue to monitor our salary and benefits through the mid-year and through, of course, the end of the year. Regarding services and supplies, there are some accounts that are still under the 41% mark, a couple that are over the 41% mark, and those are the ones that I'd like to note here, is that there's been an uptick increase in expenditures for books, media, and subscriptions. PG&E posted, and it's also in your report, of $50,000 or greater, of over $114,000, because it represents 2 months worth of billing, because they did submit to us a formal letter that discusses that they had updates in their systems that delayed the billing, and therefore we got 2 months in one bill. I mean, yes, 2 months in one bill. We're still on par, though, even though there has been an increase in utilities overall. We're still within our budget. It's going to be close, but we feel that at this point we will probably still be within budget. We'll all have more on that in the mid-year report. Capital outlays, also we've had a little bit of an uptick in our capital expenditures. We received our Ford Ranger truck. There's been landscaping at Guerneville branch and some work already performed at Healdsburg branch. The fund balance change there remains the same. I also wanted to note that the Measure Y Oversight Committee met earlier this month. I've been providing them support so that they can prepare their annual report, and providing financial data to them, unaudited financials. As you can see, the audit is still almost there, final, but not in time for the data given to the Oversight Committee. I've also reviewed financial statements with some of the oversight members to further explain our financial status, and what is expected next month for the Finance Committee is the mid-year review through December 31st and projections to year end. And like I said, I will be out of the office through the end of the month, and Julie Brown will be the main contact for the budget and finance team, and she will compile the comments for the audit to make sure that it's submitted on time for the commission at its meeting in January.
Myrna, I really appreciate that's a great summary, and I'm very glad to see that we're in such a sound financial position. I'm just going to open it up to questions from any members of the committee. Barbara.
Thank you. That was quick. Yes, Myrna, you're making our lives so much better. Just spell it all out in these great reports. It's wonderful to have the facts and the figures and know where we are. Appreciate you so much. I do want to ask if the question that I brought up in the audit, if maybe you could maybe help me how to think about this. But, you know, as we have these discussions coming up that I keep talking about over and over, I want to talk about our uncommitted fund balances and what we're going to do with them. When I read this audit today, and it does bring up this very good point that the library needs to maintain unrestricted fund balance in the general fund to fund cash flows of the library. And I'm just wondering how you could help me understand that. You know, it's probably nowhere in these reports, so maybe it's some sort of graph or something, but how that particular fact you know, feeds into these discussions that we're going to have coming up.
Are you referring to the 15% of expenses that we need to have set aside?
No, I'm not talking about our reserves. I know we have the reserves set aside. I'm just talking about this comment on page 27 under fund balance policy about maintaining enough money to cover the cash flows.
I'd like to say that, you know, I think this could be a technicality. Even the stabilization fund is unrestricted.
Right.
It is committed. It's committed for a purpose, right. but it does not meet the criteria of restricted. Right. So that could be a technicality here. So there is that stabilization fund in the under the fund balance policy that we do meet that 15%. And we could take a closer look at it when we examine, you know, the forecast and decisions on making investments. We can revisit that 15% and the policy as a whole in terms of having available unrestricted fund balance to fund, you know, sufficiently cash flows.
Well, more really what I was trying to get at, and maybe I'm just completely off base here, but what I was trying to get at was, you know, our sales tax comes in every month, but we get 2 chunks of property tax. So for part of the year, we don't have nearly as much income. And I don't really know what our cash flow is per month. I should know that, I guess. But you know, what our monthly needs are. And if the reserve funds that we have set aside, obviously we're not spending them. If that's sufficient cash to protect us against, you know, being short, you know, any month, then that answers my question. I don't have to go any further.
Yeah.
So,
well, okay. So we could take a closer look. I'm happy to do that. We do have a cash flow. So one thing is actuals and the other is budget. In the summary page, I do show that the adopted budget allowed for a use of a total of $9.7 million of fund balance, and that's combined property tax and sales tax. And I delineate that on the summary page. So side of things. On the actual sides, we can also look at, in terms of available cash, I do present the cash balance report to you all, and you can see the movements in cash balance. Can you show that page? So
yeah, that's the next page, Lisa.
Yeah, so it clearly shows that during the quote unquote dry months that we do not have property tax receipts, we are using our cash balance. And right now our cash balance as the end of November is $8 million under property tax and $21 million under sales tax.
Yeah.
So that's cash. But what is committed or or not, then you go into the statement of activities. But overall, our normal expenditures or burn rate is about $3 million per month. And that's combined. So that is something, again, that the commission could consider in terms of that 15% stabilization fund.
Yeah, I would just add that November is going to be the lowest month
All right.
of our cash balance in property tax because it's the longest period in between our property tax receipts.
Right.
Right.
So yeah, you have April and then you have December.
Yeah.
So is it a true statement then that we can actually, as commission, have this discussion about our 8 million in property tax and 8 million in sales tax? Get my language correct. The uncommitted fund balances, we can talk about spending those and not worry about our cash flow. What it says in the audit, the unanticipated, well, wait, no, it's sufficient to fund cash flow, so that's not an issue.
At this point, it has not been an issue. Right now, at the end of end of November, we have $8 million in cash. We could look at the statement of activity as well to do a further analysis of it. And then we have, we just got a receipt in December, $13 million. We look at the library needs to maintain unrestricted fund balance in its general fund sufficient to fund cash flows of the library and to provide financial reserves for unanticipated expenditures or revenue of an emergency nature. And I believe that's what the stabilization fund is trying to meet here. Would I recommend a higher percent? I lean towards, yeah, let's take a closer look at that, because my review of the stabilization fund would cover about 3 months worth of, that's the stabilization of both, the combination of both. If there were an emergency and our revenues drop down to zero, that we have 3 months worth in the reserves. Then we'd have to cobble up everything else that's unrestricted, right? Because we do have a fund balance that's unrestricted. You would tap into that as well. So at this point, without having any further commitments, if there's a short-term crisis, you're okay. But of course, we also have a lot of unfunded liability and we have obligations for our pension and our OPEB.
So quick follow-up question, our money is in the county pool. Is it liquid for us? And is that where all of our money goes? That's sitting there. So it all goes over the.
Yes, in the JPA, there it assigns the county as the JPA treasurer unless the JPA or the commission wants to change that. You have the ability to do so, but by default, the county treasury is our treasurer, and so that's where they hold our funds. And overall, these treasury notes, have taken a hit. So it's no one has been unscathed over the last few months.
Okay, thank you.
Yeah, I'm going to suggest that we defer this discussion, which I think is a useful discussion, that we defer it until Myrna's had a chance to do the 5-year projections, and we're looking at how we want to utilize the fund balances, because it's going to be all of a piece. But clearly, for the moment, we have sufficient cash on hand to handle all of our obligations, and I think we're in very good shape. Any other questions for Myrna about the November statements? Well, thanks, Myrna. I know you're heading off on vacation. I hope you and your family have a wonderful time. We're so grateful to you, and thanks for bringing Julie on board. I think we're all feeling confident that she'll be able to handle anything that comes up in your absence.
Yes.
Anybody, Barbara, I'm going to take the topic that you raised and consider that as a request for a future meeting agenda point. Is there anything else that anybody would like to? Yes, Barbara.
Also kind of follow up with the audit, it's a report on our leases, in particular, the headquarters lease. And I wasn't really clear what you were talking about the lease extension, whether we're paying 40,000 a month for headquarters plus more. I don't know if you could just kind of give us a report on the headquarters lease, but I'm curious. I've asked you a few times where we're going with the headquarters, and I'm not, maybe it's a full commission question rather than a finance committee, but I'm curious about our lease arrangements on headquarters.
Okay, we can certainly start by getting some more detail on that. Thank you, Dave.
Yeah.
So we can break that down for you.
Oh, sorry, go ahead.
At the end of last month, I sent out a memo to some folks called Accounting for Permanent Roseland Branch FF&E as a part of an obligation in our unrestricted fund balance. I didn't get any response, and it could be that the email went astray, but I'd like to deal sometime with possibly adding to a restriction on our uncommitted fund balance to the cost of the FF&E, assuming that we don't raise any money in fundraising, and changing that amount to be decreased as the funds flow in, so that we'll always know how much we have to raise in addition to what's being raised. Andy, I sent you 3 emails altogether about this. I don't know if they went astray or what. So I would like this to be considered. I don't care when. If it goes to a larger discussion, that's fine with me.
Yeah, Dave,
I think it is a
have
larger discussion.
Yeah, I have to apologize to you. I think I was hoping that Myrna would jump in with some accounting answer, because I'm quite unclear, I think, as to what you're looking for. Erica, did you want to add something here?
Well, I was just going to say that all of these questions may be answered when we have our 5-year budget projection discussion, because those are the kinds of things that we would be factoring in over the next couple of years, that looking at the, if there's a gap in funding for Roseland, where that money would come from, looking at the HQ lease and whether or not it's a good financial decision to keep leasing this space. All of these things are things that Myrna and I have discussed, but without having that information from that 5-year budget projection, we don't want to make any rash decisions. Like, we want to really understand what we're looking at to be able to make informed decisions.
So thank you. So Dave, with that in mind, would you be okay folding this into a discussion based on the information in the 5-year projection?
Yes, I would hope that you'd keep my email handy.
I have it.
Good. I have had a problem with my email account, which I'm glad did not overflow into that memo.
Yeah, I apologize to you. I do. I should have acknowledged that, and I was remiss.
Okay, thanks.
Sure. Anything else? Well, I know we've run over, but I think this was a super valuable meeting, and I'm so grateful to everyone on the committee and the staff for all the work that you've done in preparing for and reviewing the audit. I feel terrific about closing out the calendar year with some closure on this. So I'm going to say let's call the meeting adjourned at 4:34, And I hope that everyone has a very joyous holiday season, whether it's Christmas, Hanukkah, Kwanzaa, or another festival that brings light and joy into your lives. I'm so grateful for the work that you all do in support of the Sonoma County Library. And with that, we're adjourned.
Safe trip,
Thank you,
everybody.
Andy.
Thank you.
Thanks,
Bye.
everybody.
Thanks,
Bye-bye.
everybody.
Holidays.
Take care.
Bye-bye.